Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax. And to our viewers at home, thank you so much for joining us again this week. You know that Phil is very passionate about making sure that you retire with confidence and clarity, and most importantly, to have a proper tax strategy. So thank you for being with us. Phil, how are you today?
We are wonderful, and what a great topic.
Yes.
You know, folks,
this is a good one.
Well, we've never really addressed this. And, you know, with all of the new technology we're implementing and with AI, and we said it, we did a show where AI is really going to make us better advisors. So today we're going to talk about tax loss harvesting on a regular basis.
Okay, very important.
So for many of you folks out there, especially we're talking specifically high net worth folks who have large taxable accounts. We're always talking about converting your IRA and 401k to a Roth and how important it is to retire tax-free, or at least tax efficiently. Well, now we're implementing technology, and we've been doing it for the last couple years. We've been doing it with the help of one of the largest asset managers in the world, BlackRock. Okay, they manage over $12 trillion.
Okay.
But we've been doing tax loss harvesting on a regular basis. Now, most financial advisors will do tax loss harvesting, believe it or not, once a year, twice a year. At most, they do it quarterly, but they do it manually. And so the technology that we have implemented, and actually next week, my son Parker is actually going to be on. He's been working on this technology in our home office with foundations for quite some time.
Okay.
This allows us to do tax loss harvesting, and I set it up for our clients every 2 weeks.
Every 2 weeks?
Every 2 weeks.
That's fantastic.
And it's automated, yeah. So we're going to talk about all of the benefits and so forth of this. So when you tax loss harvest every 2 weeks, especially when we have down cycles, what we want to do is we want to sell losses and then offset with gains to free up tax-free money for additional investments. Or we want to sell losses and we want to accumulate losses so we can apply that towards Roth conversions and not pay any taxes, additional taxes on the Roth conversions. So there's a couple different ways to go about it. Some of our clients want, I want tax-free income. We had an individual come in, won't mention any names, large taxable portfolio, a little over $5 million in it. And she said, can you get me $400,000 and I want it from this portfolio each year tax-free.
Each year, okay.
Each year tax-free.
Okay.
So I talked to the powers that be and I said, you know what, this ought to be a really nice test. So let's set it up to where we're just pulling losses, offsetting it with gains to provide tax-free income. So we were able to get over $420-some thousand in the 8% tax bracket. She paid 8% in taxes.
Oh my gosh.
Loved it. So my mind starts racing a mile a minute. I'm like, oh my goodness, this stuff works.
Yes.
So now we're applying it in every different facet. What I would say to you folks out there, we're going to dig deep into this. Not just this show, for the next couple of shows. If you are high net worth and your current advisor, I don't care if it's Eddie, Merrill, the Fisher guy, it doesn't matter. If they are not harvesting your losses on a regular basis, you need to pick up the phone and come in or click the QR code and come in and talk to us. This cutting edge technology literally can save you tens of thousands, over time, hundreds of thousands of dollars in needless tax expense.
Wow, that is incredible. And I love the fact that you're setting this up, Phil, literally every 2 weeks. I mean, I think a lot of people probably don't even think about tax loss harvesting, so thank you for taking the bull by the horns and running with it. You know,
we looked at it. We literally can do it daily, but like I said, talking to the powers that be, it's too much. Okay, we need to take a look at these portfolios and rebalance them. either weekly or I think, 26 times a year. But we can set it up every 10 days. We can set it up however the client wants. So right now we're using different models,
yes,
and with great success. So it's all about many of these taxable portfolios, they never get touched because folks and advisors tell them, no, we don't want to sell that because you have capital gains. And capital gains tax going to put you're going to pay 20% in taxes. But when you offset losses with wins, losses and wins, that creates zero taxable income.
Wow.
And it can provide literally with hundreds of thousands of dollars, depending on the size of the portfolio. So we're going to jump in and we're going to talk about it. We're going to talk about tax savings and optimization.
Okay.
And then we're going to go through a whole list of criteria. So first of all, we want to offset capital gains. Realized losses can offset current and future capital gains and reduce your income tax at the end of the year. Now, how many high net worth individuals are interested in reducing their income tax this year?
All of them.
And here's the issue. The CPA doesn't know about it.
Yes.
The financial advisor, they probably don't know about it or they heard about it. But when you're working with a tax advisor who's also your financial advisor, we not only heard about it, we're implementing it into the portfolios. So with that being said, really big game changer. We can offset up to, that $3,000 per year. That's one thing at the end of the year. But the fact of the matter is, if we're paying attention, let's assume for a moment I have a client that's doing Roth conversions.
Okay.
They have a significant IRA, sizable IRA or 401k. Plus, they also have a significant taxable account. And folks, a taxable account, you'll know when your account is taxable because normally what happens is at the end of the year, you get a 1099 for the interest and the dividends. Not for capital appreciation, but for the interest and the dividends. And normally what your advisor does is reinvest that interest and dividends into buying more stock in that particular company. Okay. So what we want to do is we want to take that interest and dividends and we want to make sure, and for most folks, they pay taxes on interest and dividends they never received.
Okay.
So what this concept does is we still receive the interest and the dividends, but by tax loss harvesting on a regular basis, we can literally zero it out to a zero tax expense.
Wow, that is phenomenal.
Yeah, so it's really great technology. Now, like I said, we've been working on it for the last couple of years.
Yeah.
All right, but now we're implementing it. So it's a whole lot of fun. You can carry forward tax losses indefinitely, but I like harvesting tax losses against current long-term gains.
Okay.
And that's what I'm talking about. So basically, it lowers your capital gains, 15, 20% exposure in every way. What we've been noticing is for many folks, depending on what their overall goal is, how do we want to implement it? Do we want to implement it by using these losses in taxable accounts to pay for taxes on Roth conversions? We can do that.
Okay.
But the fact of the matter is, you have to identify the losses on a regular basis, and then depending on what your financial goal is, structure them in the most efficient way based on your retirement income plan.
Phil, I'm going to stop you right there. To our viewers at home, are you curious about tax loss harvesting? Has anyone talked to you about how it should be implemented every 2 weeks? Well, if you're curious and you want to learn more, don't miss the opportunity. Call in today to 888-818-6557. Again, it's 888-818-6557. We know that you have a lot of questions about strategic tax planning. Phil and his team have the answers for you. You're being offered a complimentary consultation. The time is now for tax planning. This year specifically, while taxes are still low versus what they could be in the future. Again, more information about tax loss harvesting, book that consultation, 888-818-6557, or you can click on the QR code at the bottom corner of your screen. Where that takes you to is the landing page, of course, of Empower Wealth and Tax. You can schedule your time accordingly. Don't miss it. Take action today. We'll be right back momentarily.
Hello, my name is Philip Capriotti. If you've already filed for Social Security and would like us to fast track you straight to a licensed fiduciary to create your tax-efficient retirement income plan, we'll be happy to accommodate you. You know, one of the most important priorities to ensure that you do not become tax poor in retirement is to, number one, structure a tax-efficient retirement income plan, as well as a comprehensive Morningstar report. This will ensure that you understand three major variables. Number one, how much risk are you taking? Number two, how much return are you receiving? And number three, how much are your internal and external fees? To fast track your meeting with one of our licensed and experienced team members, just click on the link below, complete the form attached so we can provide you with an accurate and detailed plan. Let's start empowering your retirement right now.
Welcome back to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax, and we're talking all about tax loss harvesting. Not done once a year, but what about every 2 weeks? That's what today's show is all about. Phil, you and I were talking in the commercial break that this is a way to mitigate, if you will. So talk a little bit about that.
Yeah, so if you mitigate tax drag on your compounding, all right, your investments are compounding, and at the end of the year, you're paying the taxes on it. So let's assume we mitigate that tax drag. Well, basically, lower taxes equals more money invested, which means more compounded growth. So when you take a look at the equation, it all works. The problem, and everybody's known this for decades, the issue is works time sensitive.
Okay.
Advisors do not have the time to do tax loss harvesting every 2 weeks for all of their taxable clients.
Okay.
They don't even offer it. They tell you to talk to the CPA. Well, the CPA has no clue what he understands the concept, but as far as having the technology and actually implementing the strategy, one is in disconnect with the other.
Makes sense.
I mean, they really are. So when you put your CPA, your tax firm, with your investment firm, then we come up with this cutting edge, state-of-the-art technology. This is the way of the future.
Absolutely.
Except we're doing it today.
It's crystal clear when you explain it that way. This is why people at home need to be calling in and scheduling the consultation. We're hearing things from you that I'm sure they haven't heard before. Yeah,
so when we get to, with respect to portfolio management, so let's go specific to that. What we want to do is we want to replace exposure, or risk exposure with the replacement of securities. So we want to swap similar investments. Now, you have to be careful, the wash rule, buying the same investment within a 30-day period. I won't really get into that. But basically, all I want to do is boost my clients' portfolio's efficiency.
Makes sense.
So we have given an example. With many of our IRAs and our Roth IRAs, we're investing in new technologies. We invest in supercomputers. We invest in mini nuclear. I'm just giving you a couple.
Sure.
Okay. We're investing in quantum computing. These are all new companies. Okay. We're investing in new forms of energy. Well, in these taxable portfolios, they're not really doing the tax loss harvesting. Unless you're adding new money, they're not taking the money in there, dividends and interest, and investing in these new technologies.
Wow.
So this is another use for the strategy that we're using with tax loss harvesting. I want to basically boost my clients' overall portfolio's efficiency without opening them up to taxation at the end of the year. In other words, having to pay taxes on long-term capital gains.
Makes perfect sense. And what about just the overall increased tax efficiency of a portfolio by utilizing this?
Yeah, so basically, a couple different things happen here. Number one, the volatility of the portfolio now becomes greatly decreased.
Wow.
Because as you're losing in a certain company, give an example. I don't mean to call out a company or, there for a while when Doge was working, there were certain factions, certain individuals didn't care for Mr. Musk. Personally, I think the guy's a genius. So what did they do? Tesla stock, by the way, dropped significantly. I bought a ton of it when it was down a bit below, I think it was 280, 270, something like that. That's beside the point. If you're automatically tax loss harvesting, okay, and there was another company, I think it begins with an A. Everybody's got the phone, right? They took a beating, okay? United Healthcare, a beating, down 45%. So just give it. The market's not down, but certain companies are.
Exactly.
Okay, so this is where we want to take, whether they're down a small, a minute amount, or a large amount, I want to execute these tax loss harvesting today. I want it to be done weekly or every 2 weeks. I want it because I want to maintain balance, and I also want to maintain new investment dollars into new technologies and new companies.
Okay.
So this is going to overall boost the client's portfolio in these taxable accounts.
Most definitely.
God, we're having a lot of fun.
I know, and it just is, it builds confidence when people know that they can have peace of mind that their investments are being watched to this degree. When a client says works with a Fidelity or a Schwab, we work with both of them, we can literally move that portfolio over in kind without selling a thing. You're basically getting a new advisor. You're getting a tax advisor as your financial advisor. You kind of get the benefits of 2 advisors in one, we'll say. Then we can plug in this software, this technology, and it's on autopilot. So we don't have to sell the portfolio. Bring it over in kind as it is, and let's go to work on rebuilding it using these tax loss harvesting strategies and technologies. It's fantastic, and really it's smoother tax liabilities year over year when you're implementing this type of strategy. Yeah, so if it's increasing the diversification of your portfolio, we can use it in that respect. If it's providing more tax-free revenue with respect to your retirement dollars, I want to pull more money out of this account, but I don't want to pay any taxes doing it. Wait till the IRS gets a hold of this. They're just going to love it, okay? But it's legal. Absolutely. It's just doing the heavy lifting. If it's saving losses in certain companies that we might be overweight in, and using that money to apply towards Roth conversions. Okay, there are a number of different ways we can apply it, and I just got to tell you, it was kind of funny. My wife says this to me, when are you retiring? I'm like, well, honey, I'm already retired. Retirement is so much fun with all this new technology, Cynthia. It is, right? It is, it is. Well, Phil, you're amazing, and I know that you have a very special message to the viewers at home. We do have to take our next commercial break, so please spend some time talking about what that is today. Okay, first of all, next week, my son Parker, who's worked at our home office for the last 3 weeks, he is now, fortunately, has graduated to, actually, they have him working on this technology specifically. Fantastic. He's going to join us on the next show. Possibly we might even be able to get him on another show before he moves back, okay? Sometime in December. But at any rate, call 888-818-6557 if you have a large IRA and haven't started Roth conversions, if you have a large taxable portfolio that has not really been adequately tax loss harvested, give us a call. Let us show you what we can do to improve your performance, diversify your portfolio, and significantly reduce your taxes, all in one kind sweep. Dial 888-818-6557 or click the QR code. Go to Empower Wealth and Tax, empowertaxbill.com. That's empowertaxbill.com, and answer a few questions or click the QR code and come on in. Now, if you ask for the fast track, we'll get you right in. If not, it may take 3 or 4 weeks to visit with me. And the fast track is really the QR code, right? It really is. I love that. Well, to our viewers at home, the number to call is 888-818-6557. Again, 888-818-6557. Today's show talks all about tax harvesting and using strategies to make sure that your hard-earned income stretch further. Well, how do you do that? With strategic planning. And that's what Phil's offering you today. Once again, 888-818-6557. Or if you need to get on the fast track, click the QR code at the bottom corner of your screen. That takes you right to Empower Wealth and Tax, and you can tell them you need to be on the fast track to learn more about tax loss harvesting. We'll be right back momentarily. I have so much more with Phil on Retire Smart Austin.
Are you ready to take control of your financial future? At Empower Wealth and Tax, our tactical portfolio management services are designed to adapt to market conditions by optimizing your investments. We create customized investment portfolios that limit market drawdown with the potential to increase your portfolio's return. With our experience and expertise, we will actively manage your investments, allowing you to enjoy life without the worry of excessive market volatility. Don't let market uncertainty hold you back. Schedule a free appointment with us today, and let's take your investment strategy to the next level.
Welcome back to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax. And if you're just tuning in, we've been talking about tax loss harvesting, and not just doing that once a year or every other year. We're talking about doing it on an every 2-week basis. Today's show is all about strategic planning for your taxes in retirement. So again, thank you for being with us. Phil, I know people in the audience are thinking, I've never heard of some of this information before. It's eye-opening, and it can be so beneficial for so many.
When they come into our office, there's a lot of things they never heard of before that they're going to be introduced to, and they're going to be taught how to run a Morningstar report, how to work with a team of certified financial planners, how to look at a portfolio through the eyes of a Morningstar report and make recommendations and make observations and then recommendations based on making a comparison. This is who you're working with. Maybe you have a cookie cutter portfolio. I don't want to get into all that. I want to stay today on taxes, but what we want to do, doesn't everyone want to really improve their after-tax performance?
100%.
Right? That's not even a question. Okay, I don't care what. I don't care whether your party starts with a D, an R, or an I.
Okay.
We all have one thing in common: after-tax performance. Okay, everybody can agree on that, especially during volatile times or when markets go sideways. We also want to capitalize on market volatility. So when most people worry when they see excessive market volatility, I look at it as a buying sign. So when we do frequent reviews and we catch these short-term downturns and turn it into losses that we can now use later, whether it's for Roth conversion, buying additional investments, diversifying the portfolio with new opportunities that they're not currently being invested in, we have a number of different pathways to take. I don't want to just do it quarterly. I don't want to do it yearly. I want to do it consistently throughout the year, year after year after year. Make the most of the advisory fee that you pay, okay?
Good point.
And so the other thing I like to say is what we want to do is we really want to rebalance tax efficiency, tax efficiently. Realizing losses, that creates liquidity when we realize those losses, and it allows us to rebalance without any capital gains or without any additional income taxes.
Wow.
Taking losses, it doesn't cost me anything to take the losses. It now provides me with a source of revenue to reinvest into new markets.
That's incredible.
And when you think about it, it makes sense, but it hasn't been talked about because, again, many advisors simply don't want to do it manually, very time intensive, or they want to tell you to talk to your CPA. Well, CPA can't help you here.
That's true.
Okay?
That is
true. So for you folks with these large taxable accounts, do yourself and your family a favor. Give us a call, come on in, stop on by, let us show you, come on in and kick the tires. Take us for a test drive. And I mean that, I truly mean that.
I think even from a behavioral and strategic advantage, if you will, it's amazing. It removes emotion from tax planning. How many times do we react emotionally when there's anything going on in the world? You can't help it, but this allows you to truly neutralize, correct?
It makes you realize that when the market is selling off, you are now creating a source of new dollars, okay, to come back with better investments, improved portfolio performance, and more diversification in your portfolio. How many of you folks, I look at these taxable accounts, and we have a portfolio model called unconstrained. And this unconstrained, I don't normally preach returns, but unconstrained means, go ahead, Phil, you and your team can do whatever you want. So we put a lot of research and a lot of analytics behind it. So for instance, give you an example. 2 or 3 years ago during the last administration, mini nuclear was like a 4-letter word. Okay, nuclear, all you had to do is N. Nuclear, no, not for us.
Right,
Give me wind, give me solar. Right, okay. Mini nuclear is now going to provide us with a new energy source that's clean for my green friends, okay? And it doesn't have to be serviced, but every 10 to 20 years.
Wow.
It has absolutely zero emissions. Now, how many folks are invested in this mini nuclear technology in their taxable account? Very, very little, if not zero.
Okay.
So, for instance, what are these accounts? And I won't mention any companies. We have companies in our portfolio that are up over 200% since the beginning of the year. Why? It's new technology. Why isn't it in your taxable portfolio?
Great question.
Well, because we don't want to trigger long-term capital gains. Well, how about just harvesting losses more frequently?
Yes.
And freeing up that income? So it makes perfect sense. There are other technologies like quantum computing, okay? I look at these portfolios and they're like, well, we have an ETF, we have a mutual fund, I'm sure it's somewhere in there. When we run the Morningstar reports, we're really not seeing it. So when I run a Morningstar report, I want to see how much overlap that individual has. They may have a basket of 30 different mutual funds or ETFs, but many times what they have are the same companies in each one of them.
Phil, thank you so much. To our viewers at home, thank you for spending time with us today on Retire Smart Austin. We have so much to cover when it comes to tax loss harvesting. So please, I know you have questions. Call in 888-818-6557, 888-818-6557, or for the fast track, click on the QR code. We'll see you back 1 week from today on Retire Smart Austin. Take care.